Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 8th of December. Now the first part of this week has been characterised by a risk recovery. That move has come on the back of suggestions that the Omicron variant symptoms are not as severe as the Delta variant symptoms of COVID. So markets are taking it that could be a sign that they can look past it. Now the first fly in the ointment that we've seen in this new risk recovery is now coming through, because we've had suggestions also from Pfizer, the vaccine production company, that suggests that the vaccine that it has may be a little bit Omicron may be resistant to the vaccine to a certain extent. So how markets respond in the next hours and days will be very interesting in terms of laying out the new way that markets look at Omicron. Now, the risk recovery has seen Wall Street sharply higher. A little bit of profit taking could be seen, but it'll be, again, if the markets can now form higher lows on these moves, it will be seen as a buying opportunity. The Bank of Canada also now comes out with its monetary policy decision after the Reserve Bank of Australia yesterday was fairly upbeat. So how the BOC comes across today again could set the stall out for the next phase of market moves, because looking past Omicron will be the next move that I think will drive that risk appetite higher. So we've also got the US JOLTS jobs openings today. Again, how many jobs are still open in the States is important for how the supply chain disruptions can be potentially got over. Now, the charts we're looking out for today, we've got the Aussie in the wake of that Reserve Bank of Australia move. The Aussie has been very strong and starting to look as a recovery play. However, is this one going to continue, or is it going to hit the buffers? We're also looking at gold. Signs of support coming in with higher lows on gold, but key resistance still lies overhead. And finally, we're looking out for the DAX. This DAX rally that we've seen on indices has been really strong, but is there time to look for a little bit of a pullback and then maybe a buying opportunity? So let's have a look. And onto the Infinox MT5 platform. Now, starting off with the Aussie, I did this on Monday actually, and the recovery that we've seen in the wake of the Reserve Bank of Australia move has been really strong, and it's now broken this downtrend. So it certainly looks like this is a turnaround move. We've seen the recovery in the RSI. Effectively, that is a buy signal from around that 20 mark above 30. That's a really strong signal actually, and breaking that downtrend, we've actually got a new uptrend. Not so good on the daily chart, but if you look on the 4-hour chart, there's a definite recovery phase that we're now trading through. We've got the improvement in the 4-hour RSI as well. Now, breaking through this resistance at 71.15 was a key move yesterday. It now sort of leaves behind what is effectively a pivot band of resistance, which is now old pivot band of resistance, which is now supportive. So 1790 up to 71.15, that is now supportive, and you start to think about that as a basis that of a buying zone there within this little uptrend that we've got. We've had a slight unwind this morning in the last few hours as markets have responded to a slight air of profit taking on risk. But I think essentially any unwinding move on this Aussie is now going to be seen as a chance to buy. 71.15 is buying opportunity level, I think, there. And it looks as though that the market is now starting to look in towards a phase of recovery for the Aussie. Next real resistance comes in around the 71.70 mark. So I think that a move towards the testing of that will be seen now, considering we're starting to see the turnaround. Looking at gold, is this also a potential turnaround? Well, we've seen the market ticking higher in a couple of days, and we're starting to see higher lows forming. However, there is key resistance overhead, 1790 to 1800 bucks. In the last few weeks, time and again, that sort of area has been where the market has moved into on an intraday basis, but then failed and fallen over. So it's still looking out for how this market reacts around this resistance now. And it'll be interesting to see that, because obviously we do have this high low in place at 1772. It's only a very near-term move, but there is a suggestion that maybe something is turning around, certainly on a near-term basis. But there is, as I said, key resistance that comes in around that 1790 to 1800 bucks area. You'd really need to see it above 1815 to be any real confidence in a recovery. Finally, on the DAX, look at the strength of that bull candle yesterday. 2 in a row, actually, 2 strong candles in a row. 15,500 is the basis of support now to 15,600. That was an old sort of pivot area there, and an unwinding move today, if it were to be seen, I think would be a chance to look for buying opportunities again. It's just slightly sort of consolidated, slight tick over in the last few hours or so. Nothing too decisive yet in terms of a corrective unwind. You've got that initial support that comes in at 1570 to 15700, 15690 to 15720 area. Initial support which protects 15600. However, I think that any unwinding move will be looked upon as a chance to buy now on equity markets as we go forward. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Friday, where I'll be looking forward to the important data point of the week, and that is US CPI inflation. So I'll leave you with the Infinite support and resistance table, and I will speak to you then. Thank you very much.